Hi everyone, we are Team 2. Today we will talk about the failure of OFO. OFO was a Beijing-based bicycle sharing company. It used a dockless system with a smartphone app to unlock and locate nearby bicycles, charging an hourly rate for use. In June 2015, OFO was launched in Beijing. By the end of 2016, OFO expanded to other cities in China with a fleet of 85,000 bicycles. In 2016 and 2017, OFO raised 580 million US dollars in funding and began to expand outside of China. It has deployed over 10 million bicycles in 250 cities and 20 countries. The company was valued at 2 billion US dollars and have over 62 million monthly active users. In 2018, OFO announced a massive reduction in operation. A large number of users find that the deposit is difficult to refund and cannot be processed. In 2019, its founder has received a number of consumer restrictions issued by the court, and OFO's bank account is frozen. By 2020, facing a large amount of unpayable debt, the company was no longer operating bike rental business. So why did OFO fail? Referring to relevant materials, we summarized the four main reasons: unsustainable business model, extensive management model, urban policy restriction, and broken capital chain. First, let's take a look at the business model of OFO. OFO provides bicycle rental and connects to the demand side and supply side. Its model is essentially rental of its own bicycles by grafting the Internet of Things technology and by introducing the concept of sharing economy. OFO has two revenue streams. First, the C-end revenue comes from deposit and rent. Second, the B-end revenue from platform services fee, such as advertising fee and big data value adding fee. Cost mainly consist of manufacturing, operating, and maintenance cost. We identified three main problems regarding the business model of OFO. Firstly, with large amount of bicycle deployment, OFO is asset intensive. This model has large amount of investment and loss. It is not a one-time investment, but a continuous investment in expendable assets. In such a heavy asset model, the cost of a bicycle is difficult to recover from the fragment riding revenue. Secondly, all the operations and the maintenance work must be undertaken by OFO itself. This cost will become higher and higher along the rapid expansion, which has become a huge burden on OFO in its process of development. Thirdly, the high cost lead to low revenue at the C end, and the B end business dominated by advertising revenue also has low exposure due to limited body size of bicycle and the policy restriction. The second reason is the extensive management model of OFO. In the competition with Mobike, OFO adapted the low price and rapid expansion as competitive strategy, but OFO didn't formulate the enterprise development strategy according to the enterprise characteristic and market condition. The misgovernance hindered the development of the company. Second, due to the lack of supervision, the manufacturers try to cut corners by using cheap materials. The bicycles are fragile because of the inferior quality. Thus, the bicycle placement happened often at large scale. Such a vicious cycle sharply increased the cost. Thirdly, in terms of corporate governance, OFO has carried out several rounds of financing, resulting in continuous changes in shareholding structure and internal contradictions. The founder, Dai Wei, always insists on the control of the company without a complete check and balance mechanism, cause many internal and external contradictions, hinders the development of the company. The third reason is the policy restriction, the government restriction on the number of bicycles, parking location, and bicycle advertising in many cities have added great pressure to OFO. The last reason is the broken capital chain. By the end of 2018, OFO has raised more than 17 billion RMB. The strong financing ability has accelerated the expansion at home and abroad. But the problem is that the rapid expansion also brought soaring increase in cost. In addition, OFO misappropriated the user's 3 billion RMB deposit to pay the areas of the supply chain, which caused great public pressure. Coupled with chaotic internal management, it eventually leads to OFO's capital chain break, and the total deficit deposit reached to 3 million RMB. So what can be done as an alternative for OFO? In our opinion, OFO can have a more sustainable business model by embracing a personal credibility policy instead of requiring deposit from users while the competitors are not doing so. Without the deposit required, OFO can gain larger market shares at early stage and increase usage rate. In addition, establishing a value ecosystem would help as well. Obviously, OFO's operation expenditure is really high and net margin is low. To twist the situation around, OFO can actually establish and leverage a stable value ecosystem internally. We believe that if OFO can optimize the big data it generates from system to launch wider service scope and develop a more diversified revenue stream, the company will be more profitable. To mitigate the capital chain issue, OFO should rethink its expansion strategy. Our suggestion is to only expand overseas market after winning the competition in China. The management team might once deem the overseas expansion as one way to boost its valuation on the financial sheet to attract funding. But in fact, rapid expansion increased the financial burden. It could be another story if OFO expanded internationally after winning China. Getting experience in operation management and increase the profitability in China will help the brand with strong capability to react to overseas uncertainties. Only by then, overseas expansion can operate safely without accelerating the capital chain fracture. As for the risk assessment and control, OFO should have hired professional risk assessment and control team to avoid making irrational competition strategies, follow up government policies, and respond quickly to build a balanced relationship with investors. So what can be done to have a better internal control? Firstly, OFO should avoid internal corruptions, having strict budget control, manage and supervise daily expenditure. Also, monitoring supply chain transactions and making cash flow transparent are critical. Lastly, OFO can have internal audit agency directly responsible to the top leadership. Then to avoid nepotism, it should have a strict internal supervision mechanism and strong accountability system. Finally, to build a better team, OFO should also establish employee training system. Hello Bike is a great industry practice for the rest market players. Hello Bike survived and become the #1 in today's Chinese market. But how Hello Bike survived? The company was founded in 2016. Compared to its rivals, Hello Bike chose a different strategy and initially focused on third and fourth tier cities in China. At the same time, Hello Bike also focused on R&D, making better bikes and reducing the cost of maintenance. Meanwhile, founders of the Hello Bike are all professional managers and knows how important it is to have a strong and high functional team. If OFO can overcome these problems, Hello Bike's success can be OFO's alternative outcome. This is our presentation for today. Thank you for listening.